Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're going to start by looking at a story from Poland Capital, a global leader in quality growth and high-yield investing. According to their recent report, the company has demonstrated an unwavering commitment to its clients and the community for over 30 years. They deliver distinctive growth and income solutions, building high-conviction, concentrated, competitively advantaged, active portfolios with the potential to compound and outperform over the long term. The report highlights Poland Capital's investment approach, which focuses on creating portfolios that can weather any market condition. Their team of experienced professionals works closely with clients to understand their unique needs and goals, providing personalized solutions to help them achieve financial success. It's worth noting that past performance does not guarantee future results, and there are risks associated with any investment strategy. However, Poland Capital's track record and commitment to transparency and client satisfaction are certainly noteworthy. As we continue to navigate the complexities of the stock market, it's essential to stay informed and up to date on the latest trends and developments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of global trade and market dynamics. Today, we're examining the potential implications of easing tensions between the US and China on India's position as a strategic partner. According to recent reports, the US and China may be moving closer to a trade deal, which could have significant repercussions for countries like India. Sudip Bandyopadhyay, a seasoned expert in global markets, has shared his insights on this developing story. He cautions that, while a deal between the two superpowers might reduce tensions, it could also weaken India's hand in negotiations with the US. Bandyopadhyay notes that if the US and China agree to a trade deal, it could lead to reduced tariffs for Chinese exports, making Indian exports less competitive in the US market. This, in turn, could challenge India's efforts to achieve its desired GDP growth. Moreover, he highlights that India has limitations in opening up sensitive sectors like agriculture, which might put it at a disadvantage compared to other countries in Southeast Asia. However, Bandyopadhyay also suggests that India can leverage its vast domestic market as a strategic bargaining chip. With a population of over 1.4 billion people, India offers an attractive consumption market for US corporations, which could be used to extract favorable deals. As the situation unfolds, it's essential to consider multiple perspectives and potential outcomes. While some argue that a US-China trade deal might reduce the urgency for Washington to diversify away from China, others believe that India can still capitalize on its strengths to maintain its position as a China Plus One partner. We'll continue to monitor this story and provide updates as more information becomes available. For now, it's clear that the evolving global trade landscape presents both opportunities and challenges for countries like India. Welcome back to the Riskwiser Zone. Today we're wrapping up with a fascinating story about Rekha Jhunjhunwala, a renowned investor in India. She's been making headlines with her recent investments, and we're here to break it down for you. Rekha Jhunjhunwala has increased her stake in Federal Bank by purchasing an additional amount of shares, taking her total holding to a significant percentage. This move has sparked interest among investors and analysts alike, with many brokerages issuing bullish calls on the stock. ICICI Securities, for instance, has given a buy call with a price target of Rs 250 per share, citing the expected improvement in the bank's capital adequacy ratio. But what's driving this investment decision? According to experts, Federal Bank is at an inflection point, with a strategic shift in its asset-liability mix underway. The additional capital will bolster CET1 levels and position the bank well for future growth. Rekha Jhunjhunwala's investment is seen as a vote of confidence in the bank's potential. It's not just Federal Bank that's caught her attention, though. She's also increased her stake in Titan Company, purchasing an additional 15 lakh shares. This takes her total holding in the Tata Group company to 5.3%. The Jhunjhunwala family has a long history with Titan, having first invested in the company back in 2002-2003. Now, it's essential to note that investment decisions like these are complex and involve various factors. While Rekha Jhunjhunwala's investments have been successful in the past, it's crucial for individual investors to do their own research and consider their risk tolerance before making any investment decisions. As we conclude today's episode, remember that investing always involves some level of risk. It's essential to stay informed, diversify your portfolio, and never invest more than you can afford to lose. With that said, it's been a pleasure sharing this story with you, and we hope you found it insightful. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.